Another perspective on the economy, let's bring in former Fed Chairman Alan Greenspan. When he joined us last September, his view could not have been more sobering.
This is a once-in-a-half-century, probably once-in-a-century type of event.
Is it the worst you've ever seen in your career?
Oh, by far. There's no question that this is in the process of outstripping anything I've seen, and it still is not resolved, and it still has a way to go.
And Alan Greenspan joins us again now. Welcome back. So last September, once-in-a-century event, the worst you'd ever seen. Is it over?
Not quite, but we're getting very close. As the Treasury Secretary just mentioned, there's been a very significant improvement in the financial system. And it's been the financial system where the problems have been.
And collapse isn't going to happen.
Collapse, I think, is now off the table. We were teetering for a while. But I do think that the TARP program, for example, was very helpful in shoring up the capital stock of the banks and the like. And not an insignificant event is the $3.5 trillion increase in the stock market value of American corporations. Because those are capital gains and they flow out throughout the system, and you could see their impact in the credit markets and in the equity markets.
How about the broader economy? Have we hit a bottom, and are we going to see a bounce?
Well, I'm pretty sure we've already seen the bottom. In fact, if you look at the weekly production figures for various different industries, it's clear that we've turned perhaps in the middle of last month, the middle of July. And indeed, you're seeing a major increase in assemblies in auto and trucks before the clunker issue even arose.
Has it helped?
Well, obviously, it's helped. It's an interesting issue. I mean, I have qualms about the concept, but there is no doubt that that very extraordinary response that we saw is a very important indicator that the state of confidence in the economy is beginning to pick up. If the clunker program had been put in place 6 months ago, it would probably have been a dud.
Oh, that's interesting, because you also saw about 5 months ago the administration also putting out a credit for first-time home buyers. Has that made a difference?
I think it has, but the problems in home building and home sales and mainly home prices is much broader than that. In fact, the way I would define it is that unless home prices stabilize within, say, maybe 5% down from here, we're going to run into some...
Well, but Case-Shiller has shown that they probably have stabilized,
well,
hasn't it?
They have stabilized temporarily. And the problem with the data on home prices is they're very difficult to measure, and they're regional data. It is possible. I don't think it's going to happen, but I do think it is possible that we could get a second wave down. But the important issue is if we don't, and I think the probability is that we won't, that we are close to stabilization. Under those conditions, you will begin to get a very significant change in the underlying confidence in the consumer area.
And then you might see that in the consumer area, you might see that in the stock market. So that is the trigger, possibly. You say it's unlikely, but that could be the trigger to a second dip.
If you get another dip in a renewed decline in prices, we're going to run into an acceleration of the number of homes that are mortgaged and are underwater. That is, that the value of their properties are less than the debt. If that happens, and clearly looking at the structure of where debt and values are, it would, if, for example, home prices fell by 10% or more, that would create a major acceleration in foreclosures. And I think it could be a factor.
On the other side, what's your best estimate right now of when we're going to see that kind of economic growth that can create jobs, above 2.5%, 3.5%?
Well, first of all, let me just say this, that the unemployment rate is going to continue to rise, but more slowly than it's been. We'll continue to have job loss, but that's slowing as well. It strikes me that we may very well have 2.5% in the current quarter. And the reason is that there's been such an extraordinarily high rate of inventory liquidation that the production levels are well under consumption. And as that slows down, as it has to, I mean, you can't go below zero on inventories, production moves up, and that could be quite significant. So I wouldn't put out of the question that we
So
get
you're fairly
into-
optimistic right now.
I'm short-term optimistic, but with many caveats. The home price issue being a critical one, and then, as you had me quoted on earlier, the deficit.
Well, that's
is
what I
scary.
want. That's what I want to press you on, because you watch Secretary Geithner there. He says the administration takes it seriously. They're going to do what it takes. Two questions on that. Do you believe that this health care reform that is now being debated is part of the solution to deficits? And number two, must new revenues be on the table?
I would say yes to both. That there is no question that the core of the problem on the long-term deficit is Medicare, specifically, and health care more generally, in the sense that it affects revenues. This is an issue which, remember, existed at the beginning of the year. In fact, Medicare at that point was only half funded. And you can't get around the fact that when you have this big shift in the baby boomers retiring, that things fundamentally change. And my view is that we have to attack both the original shortfall and make sure we fund whatever new initiatives occur in the healthcare area. It's not adequate to be strictly revenue neutral, because there's a lot more to be done to get the
So the
system
plans
done.
on the table don't go far enough, in your view.
That's my view. And in fact, I think, I thought the Secretary's remarks were frankly quite well balanced, and I think that is the strategy of the administration. But what he didn't spell out, which he can't actually at this particular stage, is that very significant additional actions are going to be required to make certain that the deficit does not get into
And that means
dangerous
control
territory.
of Medicare, control of Medicaid, control of Social Security, but also we're going to have to see some kind of broad-based revenues. Roger Altman, who I quoted to the Secretary, the former Deputy Treasury Secretary, says that the real answer in the long term has to be that we move towards a value-added tax, a sales tax.
Yeah, I don't like a value-added tax, but I agree with Roger. I think that there is a fairly significant probability that the least worst solution to the problem will end up to be a value-added tax, because it's the only thing which raises revenue in significant quantities without significantly impacting on the economy.
You said you were cautiously optimistic just a couple of minutes ago. One of your predecessors at the Fed, William McChesney Martin, 1951 to 1970, said the Fed chairman's job is to take away the punch bowl just when the party's getting started. He, of course, was referring to raising interest rates to combat inflation. Are we anywhere close to that point where that's going to have to be considered?
No, but remember that there's an awful lot of liquidity, latent liquidity in the system. And at some point, that is going to have to be sopped up. And what that means is higher interest rates from the Federal Reserve. Now, that's not immediate, but it's out there in the intermediate future, because as this economy picks up, assuming that it does, and as I said, there is an outside possibility it may be a little faster than we expect, then the Federal Reserve is going to have to rein in credit and raise rates. They know how to do it very well.
The Fed chairman says we have a couple of years. Is that about right?
I hope they have a couple of years. I don't think they do.
Mr. Chairman, thanks very much for your time today.
It's been my pleasure.